Hello everyone. Welcome to my channel. If you're passionate about trading and eager to sharpen your skills, you've come to the right place. This is the weekly recap series, where we dive into the week's highlights, break down key trades, and uncover valuable lessons along the way. Whether you're a seasoned trader or just starting out, there's something here for everyone. So, without further ado, let's jump right into this week's recap. Monday's trade. So, as you can see on the chart, gold was trading in a well-defined downward channel during the earlier part of the day. The price showed consistent rejection at the upper trend line of the channel, indicating bearish pressure. However, as the price reached a key demand zone, marked here in purple, I noticed a clear shift in momentum. The candlestick formations showed a bullish breakout above the descending channel, signaling a potential reversal. This was my cue to prepare for a long trade. Entry and execution. I entered the trade just after the breakout above the channel around the level. My stop loss was placed below the demand zone to minimize risk, and my take profit target was set near, aligning with the next significant resistance zone. The price moved steadily upward after the breakout, validating the strength of the reversal. Once momentum picked up, I let the trade run, securing a total of plus 190 pips. Outcome and lessons. This trade was a great example of patience and trusting the technicals. The key takeaway here is the importance of identifying reversal zones and waiting for confirmation before entering a trade. By using the demand zone and watching for the channel breakout, I was able to capture this move with confidence. One thing I'll focus on improving is setting a tighter stop loss to optimize my risk-reward ratio even further. Let's move on to Tuesday's trade. Looking at the chart, gold was consolidating in a tight range during the early sessions, as shown by the horizontal support and resistance levels. After identifying this range, I anticipated a breakout move. Later in the day, the price broke above the range, but instead of jumping in immediately, I waited for a retest of the broken resistance, which turned into support. Entry and execution. First trade, quick scalping trade for second trade. Once the price successfully retested the support level and showed bullish momentum, I entered a buy position near the mark. My stop loss was placed just below the resistance zone to limit my risk, and I targeted the next significant resistance level. The price moved steadily in my favor, hitting my first target for plus 10 pips, which allowed me to lock in some profits. Then, the momentum continued strongly, giving me a clean move for plus 210 pips in total. Outcome and lessons. This trade highlights the importance of patience and waiting for confirmation during a breakout. The key takeaway is that retests of broken levels often provide high-probability entries. Another crucial point is partial profit taking, which ensures that you secure gains even if the market reverses. For the future, I'll focus on refining my entries to capture even earlier moves while maintaining strong risk management. That's the breakdown of Tuesday's trade. Let's move on to Wednesday's trade for my first trade. I noticed the price repeatedly rejecting the resistance zone. To prepare, I drew a trend line to mark the support level below the price action. I patiently waited for the trend line to break as a confirmation before making any move. As expected, the price broke below the trend line, signaling a bearish opportunity. I entered a sell position and placed my stop loss above the resistance rejections to minimize risk. The trade played out well, and I secured plus 50 pips before closing the position. For the second trade, I observed the price climbing back towards the resistance zone. This time, I waited for a clear confirmation of bullish momentum before entering. Once I spotted the momentum building, I placed a buy entry above it and set my stop loss just below the resistance zone for protection. The price moved in my favor, and I managed to secure plus 30 pips from this trade. Patience and waiting for confirmation were key here to avoid any false signals. Overall, it was a disciplined and rewarding day in the market. Key takeaway: waiting for the market to come to your planned levels and then reacting with precision is a game changer. Let's move on to Thursday's trade. The market started trending upward in a rising channel formation. I kept an eye on this pattern as it signaled potential bullish momentum. My plan was to wait for a clean breakout of the channel with strong follow-through. Eventually, the price broke above the upper channel line and approached a resistance zone, I anticipated the breakout to extend further. But patience was key here as I waited for a retest of the breakout area. Entry and execution. Once the price retested the broken channel line and formed a strong bullish candle, I entered a buy position. My stop loss was placed just below the retest area, ensuring minimal risk exposure. The market moved in my favor and delivering a clean plus 90 pips before showing signs of exhaustion. I exited the trade, locking in my profits before the reversal. Outcome and lessons. This trade is a textbook example of trading with the trend and using breakouts to your advantage. By waiting for confirmation on the retest, I avoided false breakouts and increased the probability of success. The lesson here is simple. Patience and discipline are key in trading. Let's move on to Friday's trade. The day began with gold moving within a rising channel, showing a steady uptrend. As the price approached a key resistance zone, marked in purple, I anticipated a potential rejection or breakout opportunity. When the price touched the resistance zone, it started showing signs of exhaustion with multiple rejections. This was the first clue for a reversal setup. I waited for confirmation, watching for bearish momentum to build up. Entry and execution. The price finally broke below the rising channel, and I entered a sell position. My stop loss was set just above the confirmation candle, minimizing my risk. The trade played out beautifully, with the price dropping sharply and hitting my take profit, securing plus 140 pips. I exited as the price neared a strong support level, locking in the gains before any potential reversal. Outcome and lessons. This trade highlights the importance of combining key levels with price action signals. By waiting for confirmation of the rejection and channel break, I avoided premature entries and captured a clean move. The key takeaway: patience and precise execution make all the difference. That brings us to the end of this week's trading recap. I managed to secure a total of 720 pips this week, and I hope you all had a profitable week as well. If you made some good trades or followed similar setups, let me know in the comments. I'd love to hear your success stories. Thank you so much for your continued support and for joining as members. It truly means a lot and helps keep this channel growing. Make sure to stay disciplined, stick to your strategy, and always manage your risk. I'll see you all in the next episode. Until then, happy trading and take care.